Hi, this is Zach Meir with the Bulletin Board Heroes here at Vox Markets for Wednesday, the 2nd of February. Starting with Moore Minerals, which we didn't get our end of day close through 4 pence, which we were looking to take the shares up to 5 pence. Instead, we've effectively had a test of old resistance as new support. So the old peak there in August at 2.69 and the low yesterday around the 2.8 pence level. And while we're above that, I suppose we have a chance of a regrouping of the bull argument, initially obviously up towards 3.8 or 4 pence, but obviously slightly disappointing that there had to be a bit of a tree shake below 3.2 ahead of any potential fresh move to the upside. Moving along to stock that I don't look at very much, which is Blackbird. Here it's an interesting situation though. We've had effectively a double bottom with the April support from last year at 21.75 and then bounced reasonably over the last couple of sessions. But the big highlight here, really the bullish divergence here, so the RSI remaining flat there at the oversold levels around 20, even though the price action went much lower than the December floor for, basically for January. So that bullish divergence should hopefully at least take the shares up towards the 50-day moving average around 27-28 pence over the next few weeks. And obviously the stop loss just below 21.75 if you are of that kind of mindset. Moving along to a stock where there's continually a bit of a buzz, Contango. We broke that line of resistance at the start of the week there around sort of 6.5 pence and the 50-day moving average above that. Looking for the shares to hit 7.9 or 8 pence, which is that September resistance line. Then obviously after that, we can head towards the 10 pence zone. But just looking encouraging there that the shares have delivered a reasonable bounce. And once again, we've got a bullish divergence line, a long one here from back in July, which provides positive momentum for the shares. Moving along to a stock which has not had very much positive momentum at all, but rumours in the market that the pesky seller, is finally out here. I think everybody knows who he is as well, so that's even more useful. But the situation is just a hint that we've got some bullish divergence there. We did actually break that line a little bit over the last sort of 24, 48 hours, but just a hint there that this is a bear trap below the old low there at 9 pence. Obviously, an end-of-day close above 9 pence would be confirmation that we're going to have at least an initial rebound for the shares and maybe another attempt at trying to get up to the 50-day moving average level around 14 pence. But obviously, not a stock for widows and orphans. Maybe it might have created a few widows and orphans over the recent past. Company which seems to have done everything right on the investor relations and obviously the investment strategy over the recent past. We've got i3 Energy, a nice little V-shaped bull flag here above the rising 50-day moving average, and that does suggest that we're going to have an imminent break of recent 15 to 16 pence resistance, and finally for the shares to attempt a journey towards the upper 20s, which is a line of resistance there from back in December 2020. So looking more encouraging there all the time. And I suppose you could say we're in a rising trend channel with its base around 12.5 pence. So above that, the upside seems to be reasonably set fair for i3 Energy. Time frame on the 28p target maybe by the end of next month or going into April. Onto a stock which has done everything right on the investment front, but not perhaps had that much love on the share price front, which remains something of a mystery on Gunsynd. Here we've got the shares still well below their NAV, which I think is well over a penny. But we have broken that line of resistance there from back in April, also broken above the 50-day moving average at 0.85. And the longer we remain above the 0.85 area, the greater the chance of a move at least to 1.2 pence area, which is the area of the falling 200-day moving average. Once again, we've got a bullish divergence line which has been in place since the summer and bounced off that several times. So that does will hopefully turn around the oil tanker of negative price action that we've had there for much of the past year. Another stock that doesn't normally get that much airtime, iMedia, and perhaps after that gap down that we had in the summer, it's probably not too surprising. But Chance of recovery here. We've got that line of resistance there from July. That's looking rather ambitious, I suppose, heading up to 28.30p, but you never know with these things. Rising trend channel as well. I suppose it's something like that, maybe a bit tighter than that actually. So let's say the floor of the channel's there. So above 17 pence, looking for the upper 20s for iMedia. There is obviously some resistance there around current levels, but it looks like we're breaking that. So breaking the 19 pence level seems to be something in progress. And we also have a bullish divergence line again, once again from back in July. So that could also help turn around the stock. You can see the December price action was actually an island reversal. So we gapped down and then gapped higher, and we've maintained that gap ever since. So that is pretty impressive. So it does suggest that a lasting turnaround could be on the way. Speaking of lasting turnarounds, we've got Landor next, which looks like it's just about to break that symmetrical triangle and that resistance line there from June. It's already broken above the 200-day moving average at 27.7, above the June resistance line at 28 pence. Looking for the shares to go back into the mid to upper 30s, maybe even as high as 42 pence if we can get some decent follow through on the break above 28 pence. RSI area looking quite good as well. So I suppose we've got that rising trend line there in the RSI window, which should hopefully back a move higher. Stock which has been a bit of a car crash in many ways is Omega Diagnostics, and has actually provided quite a few false dawns in the recent past as well. So we had what looked to be a base at 20 pence, but that just gave way. Another temporary base there around the 10, 12 pence area, and we've even broken that. The gap down, though, just in the last few days, could be an exhaustion gap. We do have the lower low-end price, but actually not a lower low in the RSI window. So that bullish divergence might be something that at least gets the shares back up to the 12, 13 pence area, something like that, or at least fills the gap up to 10.5 over the near term. But obviously not a great situation, and always the risk of a placing or something like that, as the company has hinted. Better situation now from Perez. Covered the stock yesterday, which seemed to be, obviously with the benefit of hindsight, seems to be quite a clever thing to have done. Here I noted the brief bear trap for the shares below 6 pence and said that 6 pence looks to be the natural floor in the stock. That has been the case, especially with Chris Akers buying the shares, or notice of him doing so this morning. Initial target here up to, let's say, 8.5, 9 pence, but we could be on a better trajectory, which takes the stock up towards that line of resistance up to from back in July up to 11 pence, if we are now indeed in a rising trend channel from back in the summer, which looks to be the case for Perez. But if you're cautious, maybe you wait for an end-of-day close or a weekly close above the 200-day moving average at 7.8 pence. We haven't been above that line since back in June. Moving along to a company which is very closely related to Perez, Riverfork, because it's got a big stake in the company. I think it's something like 17%, something like that. But you can check that out. Here we've got the shares ideally or hopefully bumping along the bottom, so between 1.2, 1.3. Want to see really the shares break the 1.45 area, or if you're fussy, the 200-day line at 1.5. But I suppose there were just some traders who just say the shares are bottomed out in the 1.2 pence area, and this looks like the floor, especially with better news from and better share prices from Perez and also the investee companies that we have in Low 6 and Pluto. Just finishing off with one final stock, which has had a bit of a flurry. Here we've got Tintra, which came back rather painfully from that spike through £3.50. One of the resistance on the way up was around the £1.50 level, and actually that happened to have been yesterday's low. Above the resistance on the way down, which is £1.97. Looking for the shares to at least fill that gap up to £2.39, the gap down from the end of last month. That's it from me today. More updates tomorrow.